In this section, we will look at how PwC's former head of international tax Peter Collins shared confidential government briefings about multinational tax plans with his colleagues and created a plan to help clients avoid tax. Peter Collins was a star partner at PwC, one of the world's largest professional services firms. He was also a consultant for the Treasury and the Board of Taxation, where he helped design anti-avoidance tax laws for multinational corporations. But Collins was not loyal to the public interest. He was secretly leaking confidential information from the government to his PwC colleagues and clients, who used it to develop schemes to evade the very laws he was helping to create. According to the Tax Practitioner Board, which deregistered Collins for 2 years in January 2023, he signed confidentiality agreements with the Treasury and the Board of Taxation between 2013 but he breached those agreements by sending emails to up to 30 PwC partners and staff, both in Australia and overseas, containing sensitive details about the government's tax policy. One of the laws that Collins leaked information about was the Multinational Anti-Avoidance Law, MAL, which came into effect in January. The MAL was designed to prevent multinationals from shifting profits offshore by using artificial arrangements. But within weeks of the MAL coming into effect, PwC had developed and marketed a scheme to mainly US-based multinationals to overcome the MAL. The scheme involved setting up a new entity in Australia that would act as a conduit for payments from Australian customers to offshore entities, without paying any tax in Australia. The Australian Tax Office, ATO, discovered the leak of government documents during a company audit, which uncovered voluminous amounts of internal PwC emails in which partners and others discussed the confidential data and how to use it to benefit their clients. The ATO referred the matter to the Australian Federal Police, AFP, for a criminal investigation in May. The AFP is looking into whether Collins or anyone else at PwC committed any offenses under the Criminal Code Act 1995, such as abuse of public office, dishonestly obtaining a benefit, or conspiracy. The scandal has raised serious questions about PwC's integrity, ethics, and accountability. It has also exposed a potential conflict of interest, as PwC is the AFP's auditor and holds lucrative contracts with it. Some senators have called for a real separation of the investigation and the consulting firm working within the same organization. The scandal has also put PwC's registration as a tax agent at risk. The Greens have asked the Tax Practitioners Board to suspend PwC's registration, which would stop it from operating in the lucrative field of tax advice. The board has said it is considering its options. The scandal has also damaged PwC's reputation and credibility as a trusted advisor to governments and businesses. It has shown how PwC exploited its privileged access to confidential information to help its clients avoid paying their fair share of tax, while undermining the public interest and the rule of law. How PwC's tax business culture allowed inappropriate behavior and did not hold its leaders accountable. PwC is one of the world's largest accounting and consulting firms. It provides tax advice to many multinational corporations, including some of the biggest tech giants. But PwC has also been involved in a scandal that exposed its unethical and illegal use of confidential government information to win new business. The scandal began in February 2023, when a Senate inquiry in Australia revealed that a former PwC partner, Peter John Collins, had leaked confidential information about changes to Australian tax laws to other PwC offices around the world. The information was obtained from his involvement in government consultations on tax policy.